here's my woo-woo futuristic prediction. I will be able to take my little sliver of an Aberdeen money market fund and I will earn yield on it every minute. And then I will go into Starbucks and I will pay $25 for a latte at Starbucks or whatever it is. And I will, as soon as I make that payment, then Starbucks will start earning the yield on that little slice of my Aberdeen money market fund, because cash and assets, they're all assets. And so this idea that your money is not always every second working for you is, in crypto, we think that's outrageous.
Welcome back to another CYPRX Wealth 28 Club podcast. I'm your host, CYPRX, here with my co-host, Mr. Aqua. If this is your first time here, welcome. Today, we're going to be diving deeper into why now is the time to start educating yourself on how to incorporate DeFi into your digital asset strategy. Financial institutions are 110% watching closely, and they're not just watching, they're moving. We've got the documents, we've got the panel discussions, and we're going to be showing you guys key players in the industry confirming that this shift is for a fact happening in real time. So the question at the end of today's video breakdown is, are you paying attention? Hopefully by the end of today's video breakdown, we get you guys to see that you should be, if you're not already. All right. So welcome back to the podcast. We do appreciate the love and the support for tapping in. Aquaman, what's going on? How are you this Friday?
I'm good. How you living, bro?
I'm good, man. I can't complain. I'm a lot better than I was doing 3 days ago. I've had the flu for the past couple of days, so I've been suffering.
Yeah.
I'm not gonna lie. Yeah. It's been pretty miserable.
You've been doing every home remedy, huh?
Dude, man, I've been pumping the vitamins, sweating in this 110-degree weather to try to get the evil out of me. But yeah, not too bad, man. I was 10,000 times worse 3 days ago. I had a 104-degree fever that I couldn't break for like 3 days. Finally broke it. Haven't had a fever in a day and a half. So yeah, I'm doing a lot better, man. But I'm here, I'm here. That's what matters.
Hey, 104 is no joke, bro. That's like, you got to be careful when you get that high, bro.
Yeah, it was nuts, man. I was you know me, I can't not do shit. So
yeah. Still moving and grooving, still grinding.
Still moving and grooving. Let's run back some of the conversation for anybody that joined the convo late. I just want to reiterate that the people who are sitting on this stage all stem from large organizations or banks that are operating in the crypto ecosystem now in the moment. And I just want to pay attention to some insights and highlight some of the things that they had mentioned, so that way you guys can see from an institutional perspective that these large organizations are 110% interested in yield generation, putting their digital assets to work, lending, borrowing, utilizing crypto as collateral. Exactly what we've been touting here in the CYPRX Wealth 28 Club for the last year and almost a half now, since we started the Wealth 28 Club, to really show you guys that now is the time to start to learn about these DeFi primitives to get your digital assets working for you. So the first video clip that I want to play comes from about 24 minutes into this video. And long story short, I believe it's the lady on stage, if not one of the gentlemen, goes on to mention that banks that don't adopt are going to get left behind. The ones that are offering staking, lending, and earning yield will supersede the ones that don't, right? And so just take that into consideration from a retail perspective. Individuals that don't participate in yield generation, learn how to lend, learn how to borrow against their digital assets in a safe, secure manner. Well, again, just like traditional financial players risk falling behind, I firmly believe that so do retail investors, right? At least in terms of how they could really, truly scale their portfolio. So I love to hear Aqua's opinion on this after we play this clip. Just here, take a second and listen. Let me slow the timestamp down for you guys real fast, so it's not playing on 1.25 speed. And then let's go back to 24 minutes and listen to what they have to say.
It's not the end of the world, doesn't break the bank. So it's fantastic to see. Now I feel like the question is, who's not getting on board? Are they getting left behind? And Casper, do you see that trend, clients coming to crypto finance and wanting to get on board?
Yeah, so maybe I can give a Swiss perspective, and then I can also add a European perspective. So in Switzerland, I think we already have more than 30 banks with some kind of offering, and there are various different levels of depth of offering. Some have a very basic offering, some are already quite advanced, moving more into staking, lending, huge coin coverage. And I do think that Switzerland globally is still kind of one of the market leaders when it comes to having banks offering native crypto access. And the EU is now following quite closely. So I would say in the Swiss market, a lot of the banks are thinking more around what's next. So I already have an offering. What am I going to do next? Am I going to add staking? Am I going to look at other things to generate yield? I have a lot of investors holding Bitcoin. How can I do something with that Bitcoin? Can I collateralize it? Can I use it for lending? Are there other things we can do with it? And we do see a trend there globally that Bitcoin and also crypto ETFs are becoming more and more accepted now also by banks as collateral, which is good. I think that's really good, because if you save into a hard asset, you also want to use that hard asset for the purpose that it's supposed to serve. So yeah, in Switzerland, we definitely see more maturity, people adding more liquidity providers. So, but a lot of the big players are already into the market, and they also enable other players to come into the market. Then in Europe, the market is developing really quickly. They're behind Switzerland when it comes to live offerings. But with the launch of Mika, we now see weekly RFPs coming in from banks all over Europe. Wow. Italian banks, Spanish banks, Belgian banks, banks in the Netherlands, banks in Germany, really from all over Europe. And not just small regional banks, but also like GSIBs. So global systemic banks also looking into it. They're moving a little bit slower because they really take it very seriously. Also from a risk perspective, they don't just have one custody solution, but maybe they have two and another backup even before they go live. So they really invest quite a bit into it to do it properly. But that's also exactly, I think, the role that banks should play in this ecosystem, is bring the trust, bring the security, do it properly under the regulation, make sure it's audited. So when people use your service, they can trust it, right? And they know that it's going to be stored safely, it's fully segregated, et cetera, et cetera. That's actually what we need as an industry to grow and reach kind of the mass market. Because if you use, I think FTX was mentioned in the past, but if there are intransparent structures, there's loose regulation, people lose their assets, that's not very good for the industry. And I think this is the role that banks will play more and more. And they will also enable Bitcoin and other assets to kind of become a cornerstone of the financial market, where you can use it just as any other asset, as collateral or for lending or for any other purpose you would use other assets for.
I would just want to add as well. I think banks, the conversation is no longer should we, bank with digital assets. That's not the case. It's more of what should we do to compete with other banks that are banking with digital assets. And I think that's what's very unique. And we see that in conversations. I mean, today, for instance, I'm here with my colleagues at the EDB. We have Bahrain FinTech Bay, our ecosystem developer, and we have a local bank as well, BBK here. So you see. It's no longer, oh, should we not? It's how can we be creative and capture as much, digital assets to service our clients, and clients actually demand it. And I think that goes back to, you mentioned, who are your clients? It's the young population, and we have very young demographic. So they really would want to widen, their investment pool and their banking services as well.
Yeah.
Man, they said a lot. There's a lot to unpack there. And the question I keep asking myself as she keeps talking is, all right, well, where are they going to build this infrastructure? Where are they going to build this at? Where are they going to do this at? What blockchain are they going to do this on? Who has stuff ready right now to make this happen? Right? That's what I keep thinking of, because we're not naming any names in particular in her talk track. She's not naming, hey, this particular blockchain or this particular project. And I just keep thinking, all right, well, who has the infrastructure that's ready for what she's talking about right now, right?
Yeah, absolutely. I think the key takeaway is, regardless of what blockchain they choose, it's just more so too the confirmation that he mentioned banks from all over the globe. He said Germany, Switzerland, like he mentioned a whole bunch of jurisdictions. And he also said it's not just like these normal little tiny minuscule banks, it's GSIBs, it's globally systemic important banks. And so, just to collaborate with what the gentleman said on stage, this is a post from Blockhead from July 15th. And it reads, Standard Chartered has launched spot trading services for Bitcoin and Ether, becoming the first globally systemic important bank to offer deliverable cryptocurrency trading to institutional clients. The services went live Tuesday through the bank's UK branch, targeting corporate investors and asset managers, the bank announced in a statement. This move represents a significant step in traditional banking, embracing digital assets. As a major financial institution, they have largely avoided direct cryptocurrency trading due to regulatory uncertainty and compliance concerns. Standard Chartered's entry signal shows growing institutional confidence in the regulatory framework around cryptocurrency assets. And then it says here, the group chief executive Bill Winters described the digital assets are like the foundational element of the evolution of financial services. This is crazy to me that people are still thinking that the market is going to remain in this 4-year cyclical event catalyst that's taken place in the past 16 years when these GSIBs start onboarding into the space with billions of dollars. Like, I really truly think that people aren't ready for what's about to come down the pipeline. The next 5 years are going to be nothing like the last 16.
And I would have to say, I think the next 5 years are probably going to be monumental on what's about to come into crypto.
The second thing that lady said that I kind of want to unpack is she mentioned that, it's no longer a matter of if banks will use crypto as collateral and offer lending and borrowing to their clients, they will, right? And so here's a post that just coexists with that as well, because we don't just like to show panel discussions from large organizations saying these things on stage, but we like to show you guys this happening in real time. So check this recent post out. Shout out to the CYPRX researchers for this one. This is from the Crypto UK LinkedIn profile. And it says, according to the Financial Times, JP Morgan Chase is exploring plans to offer loans backed by clients' cryptocurrency holdings as early as next year. This would unlock so much liquidity and capital in the digital asset space. This would build on the bank's existing acceptance of crypto ETFs as collateral, representing a significant step towards using native cryptocurrency assets in traditional finance. The move aligns with the wider industry trend as major U.S. banks, including Bank of America, Citibank, develop stablecoins amid expectations of a more crypto-friendly regulatory environment in Washington. It also comes at the time when updates to the U.S. Uniform Commercial Code are making it clearer for banks to treat crypto as collateral in states like New York, which is interesting because we talk about this all the time because in the community, we have a lot of people from like New York and Canada that are like sidelined right now. And then it says, if launched, crypto-backed lending from a bank like JP Morgan could help normalize digital assets in institutional finance and set new standards for how TradFi banks engage with crypto. So this just goes hand in hand. And then a little tiny post says digital assets as collateral, which is just, huge.
Massive.
Let's run this one back. So the gentleman here, I actually didn't write this note down, but I did when we just ran the thing at 32 minutes and 45 seconds. He said that his clients, and I don't know what bank he stems from, but he said that his clients are looking at staking as a savings tool. What? Did you hear that, bro? Mm-hmm. Did you hear him say that? Yeah, let's play that back real quick because this goes hand in hand. Are you still wearing your Algorand sweatshirt? No, you're not. You took it off.
No, I took it off, bro. It's already 100 degrees outside, bro.
I'm going to play this one. I can't laugh. It hurts to laugh. I'm going to play this one real fast, and then I want to go back to a video breakdown from an interview that Stacey Warden from the Algorand Foundation, the CEO of Algorand Foundation, did just the other day, where she goes on to reiterate how this is going to become the new normal. So just take a second to what this dude says about staking becoming a savings tool for their clients.
For yield-enhancing services such as staking, for example, and if we only have Bitcoin, the yield duty, we need to do that, right? But it's also, we see a demand for yield-enhancing services such as staking, for example, and if we only have Bitcoin and Ethereum, maybe we can only offer it to Ethereum, right? And our goal is to also expand the staking services. We want to improve the flexibility, etc., that it becomes a savings tool for our customers, and that's why also we add more tokens to the offering.
Makes sense.
I think to add.
So very simple sentence, but super powerful, right? That's coming from a financial institution. That dude has way more credentials than myself and Aqua, and he's sitting there telling you guys that they're trying to offer staking solutions to their clients as a savings vehicle, right? That's huge considering that we just got verbal clarity from the SEC this year in the last month that staking is not a security, liquid staking is not a security, nor are the rewards that you get from staking and liquid staking do not classify as securities. So, what's stopping people now from at least testing this stuff, at least dipping their toes and learning about staking? Go ahead, Aqua.
Yeah, facts, bro. Just dipping in a little bit. You know what I mean? You don't have to go too crazy, but the fact that we're hearing this stuff is like the writing is on the wall that this stuff is going to be here forever. So start participating now, start learning now. And when we get to, the finish line where the rules and regulations are here, you already know what time it is. So that's all we're saying. You know what I mean? So
the crazy part is the finish line is all the money.
yeah.
Like, as cliche as that sounds, and especially if you've been in crypto for as long as I have, since 2016, it's like we've been hearing that year after year, but you really have to understand everything is about to come on chain over the next, let's just say 3 to 5 years. Hopefully it happens sooner. I'm realistic with my expectations. I think that at least at a minimum by 2030, we're going to see a substantial increase in market valuation of the total cryptocurrency market cap and on-chain finance. Go from 3 trillion to 10 plus trillion dollars between now and 2030. That's a very realistic expectation. And I could just go out on a limb and say it's going to happen for sure.
And when you're saying that, I'm over here, in my mind, I got Don Dooney's voice saying it's going to happen sooner than you think. It's going to happen sooner than you think. It's just like, as you're saying that, I'm hearing his voice saying it's going to
Yeah, Dan Donnie, for anybody that doesn't know, is, I don't remember what position or what role he plays at the DTCC, but he plays some high-end role at the DTCC. If I'm not mistaken, he's the managing director at the DTCC, isn't he?
Yes.
I don't want to shit on that dude's credentials, but he's definitely some important individual, right?
Way up the totem pole.
So that video clip of the gentleman mentioning, right, that they're trying to offer staking solutions for their clients inside the banking infrastructure that they're building out right now so that their clients can use staking as a savings tool. This just kind of goes hand in hand with what Stacey Warden said, like from 2 weeks ago on a interview that she did, where she reiterated this era of continuous finance that we're headed into, where you're going to be earning yield on every single asset that you have, whether it's cash, whether it's crypto assets, whether it's stocks, whether it's real estate. And that will be the new normal, right? And you'll just be able to buy things with your yield instead of buying things with your cash or with your crypto or with your stocks or by selling your real estate. You're just going to be utilizing the yield to take care of everyday average purchases or pay your bills or go buy your cup of coffee. So just listen here to what Stacey Warden says.
So here's my woo-woo futuristic prediction. I will be able to take my little sliver of an Aberdeen money market fund and I will earn yield on it every minute. And then I will go into Starbucks and I will pay $25 for a latte at Starbucks or whatever it is. And I will, as soon as I make that payment, then Starbucks will start earning the yield on that little slice of my Aberdeen money market fund. Because cash and assets, they're all assets. And so this idea that your money is not always every second working for you is, in crypto, we think that's outrageous, actually. And so the idea that you would always hold yield-bearing assets, that they would be liquid and you would be able to treat them like money and you would be able to pay for things and yield would be continuous. It's continuous finance. I think that will be, by the time your kids are.
I love it when you smile when I play videos, bro, because she literally sounds like she's in the Wealth 28 Club. Who's in the chat right now that's in the Wealth 28 Club? Does it not sound like Stacey Warden's in the Wealth 28 Club?
She said it's outrageous to not be earning yield.
What's crazy to me, bro, do you think she's under like some type of restriction to tell people that this is already possible now? Because what I noticed about what she said is, she said my woo-woo future prediction is that this will be possible, but this is already possible. Like, this is already possible right now on Algorand through Petra Wallet on Folks Finance, where you can take your algo, you can stake it or liquid stake it. You can get a liquid stake token, go out and deploy that liquid stake token in the DeFi ecosystem, earn yield, take your Petra wallet that now is integrated with Visa and MasterCard and go and freaking buy a cup of coffee. Now, I know that Starbucks probably hasn't integrated blockchain into their backend infrastructure yet to participate in what she said, where you're paying with your yield, then Starbucks is going and earning yield. But you can definitely buy coffee right now with your yield from crypto, like right now.
Yeah, I feel like she's talking more along the lines of it being just like it just does it for you. You know what I mean? Like right now, there's a lot of clicks that we got to do to make that happen for us right now in DeFi in this ecosystem today. But in the future, I feel like a business is going to just hook up like their whole business model to some sort of POS that's connected to the blockchain, and it's going to just streamline everything that she said smoothly, like to where they just sit back and money comes in and it gets put into this part of the account that's earning yield, and then whatever they do at the end of the week or the end of the month and move stuff around or whatever. But yeah,
it's pretty crazy to me, and it's weird too because that like falls in line with like this whole ideology behind people just being held back from the things that they can say. And it's just weird. There's like for real some paid actors out there that are trying to like keep things suppressed from the average general person, like that's out there like that needs this info, bro. Like it's crazy to me, like I was just gonna say, like, how many people on this call right now could save on their water bill or their electric bill, or for me in my area, because of the house homeowners association area that I'm in, I have to pay for trash. It's like $90 a quarter, right? So instead of paying my water bill and my electric bill and my trash bill with my hard-earned income, I'm paying that right now with my DeFi income, where every single quarter when I pay those bills, or every single month when I pay those bills, it's getting paid with the market's money, and it's wonderful. And now, even though it's not a lot of money, it's $40 for a water bill, but it's being taken care of by DeFi, and it's A1. How many of you guys could use that right now, right? I'm sure most people on this call, right? So take that into consideration. I'm not telling you guys to go out there and start doing that, but just know that it's possible. And if you now know it's possible, the question is, do you know how to do it? If you don't, take initiative and start learning, because in order to learn, you don't have to risk your assets to go and to learn, right? Go ahead, Aqua.
Yeah, facts. And I was just gonna kind of just piggyback what she was saying though too, as far as like that whole scenario being possible. If I'm not mistaken, that's part of what Stronghold is doing in their project as well, for like small businesses and businesses of all sizes, but bringing DeFi to that business model and being able to do exactly what she just said. So, but yeah.
Yeah, I want to, because we don't talk too much. I don't know why. Yeah, I'm going to keep muting your mic when you're not talking, because I don't know why your thing's echoing like crazy right now.
My bad.
We don't talk about XDC too often on these podcasts, albeit I hold a very large bag of XDC, and I don't want to shill it to you guys by any means, but I just want to show you guys some ongoing developments on the XDC network that correlate with what JP Morgan's possibly considering doing via a recent test that involved RChax or RCAX, however you say it, in the XDC network that was recently announced. So going back to this post where it says JP Morgan may soon accept Bitcoin and Ethereum and other digital assets, I like how it says other digital assets as loan collateral. Well, if we come over here to this groundbreaking announcement, I mean, this is a massive milestone, in my opinion, for XDC. And so this is an announcement from RChax Versprop, hopefully I'm saying that correctly, Spitfire Financial Group, DAZN Investments in the XDC network from August 7, 2025. So just yesterday, right? And this announcement reads, in a pioneering step toward the convergence of real estate blockchain and regulated digital finance, RChax and all of these other organizations, including XDC Network, have collectively announced the successful execution of a tokenized commercial real estate finance transaction. The company believes this marks a significant milestone in the evolution of institutional-grade asset infrastructure. XDC Network is uniquely suited to revolutionize, decentralize, and liquefy the trad finance industry through tokenization of real-world assets and financial instruments. It goes on to mention that this transaction showcases how real-world assets, specifically commercial real estate, can be digitally financed and traded using blockchain tech unlocking new efficiencies and liquidity pathways. The initiative demonstrates the maturity and readiness of tokenized finance to scale in institutional markets. Then Nick Donovan, the CRO of Archax, said that this project showcases how regulated digital asset infrastructure can be applied to real-world finance. By tokenizing commercial real estate alongside trust partners like Archax, says Joel, the CEO of Verseprop, Spitfire Group, Dazon, and XDC are demonstrating that real estate finance can be faster, more efficient, and significantly more cost-effective than TradFi models. This is the future of real estate and the future of finance. So I just think that this is monumental, considering that a week ago, right, JP Morgan mentions that they're thinking about accepting Bitcoin, ETH, and other digital assets. I like I said, how they say other digital assets. And then a week later, they go out and do this on the XDC network, which is just mind-blowing to me, right? And this goes hand in hand with what this guy said here on this panel at 35 minutes and 30 seconds. Listen to what he says about how this industry has matured significantly.
8 years in the industry, and every year should have been the year of the tokenization, right? And it really never did really happen. So, but what changed now is, I think the last years, it has always been very coupled to the price of Bitcoin or the crypto ecosystem itself, all these tokenization initiatives. And this is different now. I think 5 years ago, if you started a tokenization initiative within a bank and Bitcoin dumped, you would have a problem, you would have stopped your initiative. I think now it's different. The infrastructure is here and it has maturized. So,
all right. So, you're seeing JP Morgan announce they're going to offer crypto as collateral for real estate loans. You got them testing this stuff out in a regulated manner on the XDC network. Then at the same exact time that we got clear regulatory verbal communication from the SEC, right? I don't think that any of this is a coincidence. So for anybody that doesn't know, the other day, we had SEC chair release a statement that mentioned that staking, liquid staking, and the yield that you're earning from both of those DeFi primitives do not classify as a security. At the same exact time, you had XDC liquid staking go live on PrimeFi, and they chose crypto.com custody solutions, which crypto.com custody solutions are regulated, where now users can go out, they can liquid stake their XDC, in return get a liquid stake token, and keep their liquidity in XDC and never have to sell, and then go out and participate in DeFi primitives on XD. Like, this is huge. This is crazy. This just goes to show that things are picking up pace at a very rapid speed, and you should not be ignoring this, right? I mean, go ahead.
Do we know, I don't want to say it because I think I kind of seen it in the Discord, but who is behind PrimeFi Finance though? Who is behind it? Do we know?
Yeah, it's a dude that's directly on the XDC network. I don't remember his name off the top of my head. But yeah, he's on the XDC network.
Massive. That's massive right there.
Yeah, it's huge, man. I mean, it's just crazy to see that right here in the Prime staking docs, you can see it says Prime staking and trust validator node keys and stake XDC to crypto.com custody, a regulated third-party custodian that delivers institutional grade security while preserving the protocol's non-custodial user experience. Now, I'm not telling you guys to go out there and deploy onto Prime staking, but here in the CYPRX 1228 Club, we've gone out and tested this for our private community to show that not only can you deploy onto this platform, but you can successfully withdraw off of this platform as well while earning rewards. We've shown people in the community what those reward generation, spills look like, testing this out. So again, if you want to learn that stuff, head over to CYPRXtrading.com and watch us put our assets to work, what wallets we're using, what protocols we're taking a look at, so that way you don't have to go out and risk your digital assets. You can just learn from our trials, our tribulations, and any mistakes that we may make. So that way when you're comfortable and the environment is clear for you in your mind, you're like, oh, I know what I'm doing because I saw these guys do it for 6 months to a year, right? It's that simple. And that whole process does not really require any risk on your behalf, except tapping into the Wealth 28 Club, right? So really great stuff here that we're seeing. I mean, the landscape is changing so quickly. I want to continue to show you guys because I really want to get into the metal ecosystem via some stuff that I've recently shared in Aqua's, maxi mindset on on the metal ecosystem lately, which I love. I can't stress enough. Like, man, this guy right here is just making me so bullish on the metal ecosystem, albeit I probably should have listened a lot sooner than I recently have, but we'll talk about that later. I want to continue to show you guys proof that these institutions are the ones telling you guys that you shouldn't be afraid of this whole notion behind double-digit yields and yield generation and the ability to lend, to borrow, because they're the ones participating in these DeFi primitives themselves. So the notion that you should be fearful of double-digit yields is like a 2021 to 2022 mindset. I'm not saying not to be cautious. There's still, obviously, of course, a lot of risk involved, smart contract risk, protocols being exploited, slashing, all kinds of things that you need to be mindful of when participating in DeFi. We talk about those risks in the Wealth 28 Club and we let those be known. But again, you should not be sidelined with your education, right? Your education should come first, and everybody could get educated without risking their digital assets, which is what we recommend. So check this out. This is a document from Kiln, The Uprising of Vaults in the Road to Institutional DeFi. It's a report from July 2025, so it is relatively fresh. We're going to come down here to page 8, where it talks about market trends, and I'm going to just read these 2 paragraphs here. It says, so far in 2025, there has been an increase in institutional activity within the vault space as TradFi players launch products or make moves into integrate vault technology. For instance, one of the world's largest asset managers, Apollo Global Management, made its first DeFi debut in Q1 2025, first announcing that its flagship $1.3 billion private credit fund, Apollo Diversified Credit Fund, was tokenized on blockchain via Securitize. Later on in the quarter, it was announced that using Morpho and curated by Gauntlet, the vault will enable accredited DeFi users to deposit tokenized Apollo Credit Fund shares into a vault and borrow against them, looping into more yield, effectively creating a levered yield vault for private credit. The vault strategy can offer more than 16% APY by using the tokenized fund shares as collateral to borrow USDC and rebuy more shares. So this is a regulated fund product for accredited investors that can earn 16% APY. So anybody right now that's out there saying that DeFi is not regulated or supported by regulated financial institutions and that you should shy away from double-digit yields, they're not doing the research, right? So this development marks a significant step forward and brings fresh liquidity to traditionally illiquid private credit assets, and at the same time demonstrates how vault protocols can boost return for potential on real-world exposure for large TradFi players like Apollo. It also showed the power of DeFi composability. Apollo's tokenized fund can plug into lending vaults via Morpho, in this case, to amplify yields. The success of ACRED's launch, with over 70 million tokenized within a few months and represents over 7% of the total private credit fund, may pave the way for other private equity, credit, or real estate funds to follow suit on-chain. And so, I just love the fact that financial institutions are participating in pretty much the same looping strategies to some degree that we're participating in here in the Wealth 28 Club that we'll get into today, especially on the metal ecosystem. Go ahead, Aqua, if you had anything.
I love seeing the double-digit yield as well, because I remember when we first started creating, Wealth 28, that was our, a common topic of discussion. What is the future going to look like with the yield percentages, and to see us, around anywhere from 5 to 16, potentially 20 and 30%. I'm comfortable with 16%. I'm comfortable with 10%. So like seeing this and hearing this as confirmation on what's coming, I'm really excited, because we had plenty of discussions. We thought it was probably going to throttle down to like 2, 3, you know what I mean? Super, super low. And to see this, like, this speaks really loudly, and we're going to really be able to compound our portfolios on steroids with these type of yield percentages. So
Yeah,
Exciting.
you couldn't have said it any better. Compound our portfolios on steroids. That's going to lead me over to my Metal X discussion, because I feel like after being put onto Metal X over the past, since pretty much 2023, albeit I didn't take charge of the opportunity in 2023, I definitely have known about Metal X since then. But now being involved in the ecosystem and actually participating in their DeFi primitives, it's like mind blowing that I ignored this for so long. So MetalX posted this: lend, borrow, mint, trade, pool, farm, swap, stream, all available on MetalX with 0 gas fees. Yo, like this list is so massive.
Super massive. And the post that they had posted as far as where's it at? XPR is actually the world computer few understand. Bro, I have something basically I want to share to piggyback this. I don't know if you have something after this, but just check this out. Okay, go ahead. Go ahead. You go first then. You go first.
Okay, because you're going to kill it. I kind of just want to give my little tiny spiel about this, because mine's going to seem minuscule towards yours, I feel like. But I had this doc to share after that, which is this doc from Digital Asset Solutions, DAS. And it just mentions how these firms are 110% starting to realize that this is a regulable asset class, DeFi in particular. So check this out. It says, huge potential, but not without challenges. The global secured lending market, with an estimate value of over 15 trillion, is one of the largest segments in the financial industry, and it is currently dominated by TradFi instruments such as mortgages, car loans, and Lombard loans. With the ongoing tokenization of real-world assets and the automation via smart contracts, a digital infrastructure is emerging that has the potential to fundamentally transform existing structures. DeFi is an extraordinary innovation, and it makes markets faster, cheaper, and more transparent. That's coming directly from Larry Fink from BlackRock, by the way. He didn't say crypto. He didn't say blockchain. He said DeFi, right? Not only specialized crypto protocols, but also giants such as BlackRock, Franklin Templeton, and Fidelity are investing in this development, whether through tokenized government bonds, proprietary stablecoin structures, or infrastructure partnerships. At the same time, investors benefit directly. Those who invest in the native tokens of leading lending protocols participate in the fee streams and governance mechanisms of these new digital lending markets. The current market capitalization of decentralized finance platforms stands at around 34 billion and is increasingly competing with TradFi institutions whose market value is measured in trillions. Despite inherent risks such as technical vulnerabilities, lack of legal certainty, or liquidation volatility, the DeFi lending market is rapidly evolving from an experimental idea to a structured, regulable asset class. So I just thought that that was massive, that it just goes to tell you right there in the document, like, hey, hello, wake up. This is not experimental anymore. This is happening, you know?
And that's coming from somebody extremely smart that's tapped in, that's telling us that lending and borrowing it's humongous, like major. Like just looking at Aave being the #1 protocol over on the Ethereum chain, and that's lending and borrowing. So yeah, that's why I'm so stoked on the loan protocol.
For the individual Max, you should go and you should check out what's the platform that I pulled up yesterday on the Zoom call? Pendle. You should go look at Pendle, Max, because, you know, there's a rebuttal to what you're saying right now in the chat, but, you know, at the end of the day, teach his own. You can't get everybody's mindset right, you know. I agree with you to an extent, but you have to understand that it's not about high yields here. For example, this post, I said I staked half my XPR to start my flywheel. For the record, XPR right now, you can get 4% on your staked XPR in your WebAuth wallet. And I said, my flywheel's flying. Loving how you can see the rewards compound in real time. And I said here, we don't discourage people who start off with small amounts. We show them that earning something is better than earning nothing at all. Even if it's a penny on a position, the compounding flywheel turns into hundreds. Hundreds turn into thousands, and thousands turn into millions. This is not a get-rich-quick strategy. it's diversifying some bags to test out long-term DeFi strategies. This is the I'm here for 2030 and beyond strategy, right? So I went over my strategy in detail in the CYPRX Discord, but I really want you guys to pay attention to something that was recently said by Chair Atkins, right? So this is the video breakdown from 7 days ago. The Securities Exchange Commission posted this, American Leadership in the Digital Finance Revolution. And one key vocabulary word that he specifically said is how he believes people should be able to participate in super apps. That key vocab word right there is extremely important. Super apps, all right? It's so important because I said here, the amount of FOMO that is about to happen when people realize how powerful the Metallicus ecosystem is. Meta went bananas. Loan is going bananas now. This is the other day when everything was pumping. XPR is a ticking time bomb, which it just recently had a nice surge. The best part is while you're holding all these assets, you can print passive income. And they're not offering high yield incentives like you just mentioned in the chat, Max, right? They're offering low, steady yield returns on staking to secure the network. Okay, this has nothing to do with high yield incentives. This has everything to do with just staking to secure the network, right? And if you don't understand how important staking is to secure the blockchain network, then again, just go do a little bit of research, because institutions, in my personal opinion, and I can guarantee this will materialize over the coming years, if not months, will be required to participate in staking to secure the network if they're going to hold certain digital assets on their balance sheet. Just again, go ahead, Aqua.
And some of them will become validators as well. Like,
Facts.
so yeah, go ahead and continue though.
So listen to what this gentleman here says, Chair Atkins. And when he mentions the terminology super apps, because I want to kind of show you guys how that vocabulary is embedded into the Metallicus ecosystem. So take a second here and listen.
A key priority of my chairmanship is to allow market participants to innovate with super apps. I'm often asked, what do you mean by a super app? Plain and simple, securities intermediaries should be able to offer a broad range of products and services under one roof with a single license. A broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services like crypto asset staking and lending without requiring 50+ state licenses or multiple federal licenses. Nothing in the federal securities laws prohibits SEC-registered trading venues from listing non-securities on their platforms today, and I've directed the Commission staff to develop further guidance and rule proposals, ultimately to make this super app vision a reality. So maybe they'll call it a Reg Super App.
And would you say a super app is basically like a DApp, somewhere you could deploy your digital asset and earn yield? Is that like, am I aligning with what he's saying?
Here, I'll show you what a super app is. Just read this post.
Exactly.
Right.
And that's what go ahead. I think you have something to say, but go ahead.
Yeah, bro, because look, okay, so MetalX, they offer lending, borrowing, minting, trading, pooling, farming, swapping, streaming, all in one platform. That's a super app right there, right? Okay, so check this out. Paul Atkins mentioned 3 times, he said the vocab super app. Okay, well, if we come over here, look at what MetalX has been posting. It says right here, MetalX app, the DeFi super app, right? There's one, and they said this like 10 times in their last 100 posts. So this vocab is reiterated all throughout the XRP or XPR and the Metal ecosystem, right? So look at this. This is another post from XPR Network. It says MetalX, the DeFi super app, right? So I was like, that vocabulary continues to pique my interest, considering that's something that Chair Paul Atkins said. Well, then we come over here, and Marshall Hayner put this out the other day too. Marshall Hayner's always tapped in. He said, ISO 222 is an international standard for payments and settlement between banks, institutions, and blockchains. This is a core component of the technology that will merge TradFi with DeFi. Metal Blockchain and XPR Network are the only 2 blockchains in the world that have it live right now. And then he listed the link so you can go confirm that yourself. But then what was even more interesting is that XPR Network back on January 13th, 2025 said XPR is actually the world computer, if you understand. And then Marshall Hayner posted this poll the other day that says, which would you choose for the operating system of the US government? Most people picked XPR Network, right? And then if we come over here, Chair Atkins posted this huge thread on July 31st, 2025. And right down here, what did he say? Third, a key priority of mine is to allow market participants to innovate with super apps, right? And who reposted this? Marshall Hayner.
Bro, he is basically describing XPR, the metal blockchain, to the T, because this is how it works. Metal blockchain is a layer 0. That's giving the ability for these institutions, these banks, these credit unions, whoever else, the option to have their own blockchain, have their own stable coin. Now, where the dApps come in is their primary subnet, which is XPR, because XPR network is built into the metal blockchain. And that's where the innovation of super apps will exist at. And what's the cherry on top of all this? This is all BSA compliant right now. It's BSA compliant right now. Yo,
yeah, bro. I don't believe in coincidences. And I mean, just think about it, because I'm on Twitter all the dang time, you know, in order to be, because Marshall Hayner reposted this, right? So you have to be paying attention to what these people are saying, right? You're not just like going to randomly catch what Chair Paul Atkins is saying. If you're not watching what he's saying, you're going to miss it because of how fast Twitter moves and how fast the space moved. Marshall Hayner reposts this, where Paul Atkins specifically in his speech is mentioning the ability for people and organizations to be able to participate on super apps, right? He didn't say DeFi apps, or he didn't say D apps. He said super apps, right? And then you got the Metallicus ecosystem constantly posting the vocabulary super apps in their posts. And then you got Marshall Hayner coming over here and talking about how, you know, they're the only compliant blockchain right now that's live with ISO 222, and how they're going to merge TradFi with DeFi. And you got XPR Network coming over here saying that they're really the world computer and that full understand. This is just mind blowing to me, bro. Like I don't know, man. You know, it just doesn't. It's wild. Like
it is. It's super wild. And the facts are the facts. And the Metallicus ecosystem it's been built. Like, let me share my screen too real quick here. Let me just share with everybody. Hold on. Let's see here. So this is what it's talking about when it's talking about XPR Network being the blockchain computer. Basically, it has human relatable accounts like @names. So instead of your long, you know, however many letters and numbers it is, it's at your @name, right? You got native multi-signature wallets, which is the WebAuth wallet. So you can have multiple signers on that one wallet, right? That's major. That's huge. And keep in mind, WebAuth wallet is open source, guys. So like, if an institution says, hey, we want our own blockchain, we want our own stablecoin, we want our own wallet as well to custody these digital assets, well, the WebAuth wallet can just be, you know, it's open source. It's white label. So, you know, XYZ credit union can come in and put their name right on the WebAuth wallet, right? And you got feeless transactions. You got fast and scalable architecture, right? Which is settlement times being a half of a second. And I feel like a lot of us, you know, settlement time kind of goes over our head, not to mention the speed of 4,000 plus TPS. And they're actually going to be combining that speed with the metal blockchain speed. So it's going to end up being like 10,000 plus TPS eventually pretty soon here, right? And then you got WASM smart contracts. I don't know too much about it. I was kind of Googling what a WebAssembly is and all that. I mean, I encourage everybody here to go look that up. I'm still kind of learning about it, but the facts are the facts that it's built into this XPR network. It's got built-in governance and then native token management. And you know, just come and take a look at this. You guys can come and read this yourself, but this is the breakdown of why XPR network is the blockchain computer. So it makes sense to me. And once you start using the WebAuth wallet and moving money around, like I just got my 65-year-old dad the WebAuth wallet. He's buying XPR. He's buying Metal blockchain. And what's so cool is that he wasn't able to get his debit card added to his Coinbase account. So Coinbase is giving him hiccups. You know, the transaction would go through, it failed. He had like a $50 limit only. So he was like, yo, son, I'll send you some money and then you could just send it to me in my wallet, right? And I'm like, yeah, for sure, Dad, I got you. So I've been sending him stuff, no problem. I'm not having to look up the entire account number or any of that stuff and remember numbers or write them down. I just have his @name. So I put the money in my account and I send it to him like as if we're on X or whatever, you know what I mean? Or on Instagram. So this ecosystem is light years ahead of every other ecosystem. Like I just continue to ask myself without bashing other ecosystems, because I know I can probably come off like bashing ecosystems, especially with this new excitement that I hold for XPR network. But I just ask myself, everything that we've heard today, everything that the gentleman was just saying about super apps, who is the most aligned with all of this? Who is the most aligned with giving these institutions the ability to custody native digital assets? The one that I'm looking at that's most aligned is the Metallicus ecosystem. So, you know, I got a short video I want to share as well. I think you'll get a kick out of this video. It's a Marshall Hayner video from, let's see here, two years ago. And he talks about the vision and he talks about the future of Metallicus and what that looks like and what success looks like. And I feel like we shed a lot of light on other people and their vision and their roadmap and everything. And Marshall doesn't get enough credit for what he's built, you know, how far he's come. And to hear this snippet right now, I'm kind of curious to get your feedback, is, you know, what your opinion is. It's about 4 minutes. Can
I say something before you play that? Because there's some, Tiff said something in the chat that just goes back for anybody that's on the call now that didn't hear this from the Algorand CEO. So before you play that real fast, because I want to comment on what Tiff said, because she said the amount of rewards that you can earn in the Metallicus ecosystem is crazy, right? And so that just goes hand in hand with this post that I put up from Stacey Warden, where she's talking about this era of continuous finance and putting your digital assets to work, taking that yield, and then using your yield to purchase everyday average goods. And then the purchased yield that you're using, the company that you're giving that yield to then goes and starts to earn yield on it. And it's just a continuous loop. You know, for anybody that doesn't understand, like, you don't need, the idea here is not to start to make a lot of money. This is not trading. This is not leverage. This is not high APYs or APRs. This is just looping and compounding with a long-term perspective. And so starting with a small bag and building a skill set is what's going to really take you to where you want to get long-term, right? So in this post where I was talking about my Metallicus ecosystem flywheel, I said here, and just to show you guys that in the community, we're not boasting or bragging about making all this money or like all this, we're like literally testing it with a few $1,000s to show people that it's possible to start to accumulate dollars here, cents here, and what they can turn into over a prolonged period of time. My farm pool on XPR right now, I believe I'm in XPR USDC, is about $46, and I started it like 2 weeks ago. That's $46 that now, if I went to go look at my water bill for this month, it's probably like $35 on average. I could take that yield and I could go and I could buy, pay my water bill with. So this is just physical proof that it's happening. Where I said my update after starting my flywheel on July 23rd, I have about blank. I'm not going to say how much publicly I have in my portfolio. That's for the private community, staked in XPR. That's making me about $1.75 per day. Every 2 days, I take those stake rewards and I add it to the XPR USDC pool, which is earning on average about 44 to 46% yield. Started with 0, and now my pool value is over $20 in about 2 weeks. This is again about a week ago. Currently, I'm already earning about 1.5 to 2 XPR per day. So a lot of people will be like, oh, 2 XPR per day is not a lot. But then what am I doing with that 2 XPR per day? I'm harvesting that and I'm putting that back into my XPR staked position. And it's just a flywheel. It's never ending yield. And it just compounds and compounds and compounds. So it might be dollars now, but by 2030, guarantee you it's going to be $100 a day or $200 a day, or maybe even $300 or $400 or $500 a day. Again, all in comparison to with price appreciation of XPR, the digital asset, we have to take into consideration, which I can almost assume based off of everything that we're showing you guys now is probably going to continue to go up in value, right? So like, don't think so small-minded because it's pennies and dollars now. Think in terms of strategy and building a skill set. The skill set is what you want to master, not you know, the value, right? It's not the value, it's the skill set. That's the important part. So go ahead, Akko. What did you want to share?
Yeah, I'll just piggyback that too. It's like, and then I'll share the Marshall video, but you know, really positioning yourself and making goals and plans around creating a stream of income for yourself. So like, you know, looking at this breakdown and saying, okay, well, like today's price is today's price. And I'm not necessarily looking to get rich today or make a bunch of money today, but what do I need to put in here to get to a certain goal? Maybe you want to make $50,000 in, you know, passive income, or it's $100,000 or whatever that number may be. These assets are still priced at a price where like you can get in, you know, fairly cheaply. And, you know, basically instead of cashing out millions of dollars, now you've created a business, a cash flow business that you can keep in your family tree. And those digital assets that are giving you that cash flow can be passed on to your offspring or whoever you're going to leave it off to, you know, when it's your time to go, right? Because that's part of life. We all got to go at some point. So that's how I'm thinking of it though, right?
Mm-hmm.
Like my digital, I know CYPRX is as well. My digital assets are going to my kiddos. When it's my time, my offspring are going to get all my digital assets. How I set that up, I'll have it probably on a trust on the blockchain. So yeah, that's why we got to look at crypto as like, this is dynasty type of stuff. You know what I mean?
Literally, bro. Imagine if you're listening and you think that your portfolio is going to go, you know, above $500,000. Imagine LLC protection structured in a trust, and then that portfolio is just sitting in a looping strategy that you practiced with thousands of dollars to solidify the strategy works. Then you apply that to your $500,000 or maybe even more, because some people are going to make much more this next bull run cycle. And your kids are, I mean, my kids are under the age of 10. So between now and the time that they're going to gain access to that trust, the whole entire freaking time, which is probably like 20, at least 30 more years, the strategy that I just showed you guys in the trust, and then it's just that for the next 20 years. Like, it's generational wealth. I feel so bad for people that are still listening to influencers that are like, oh, when price hits this level, we're going to sell and wait for the pullback to re-enter. What pullback? What pullback do you all see happening when globally systemic banks for the first time ever are about to come into crypto? What the fuck are y'all talking? What are these people talking about, y'all? Like, what pullback?
Yeah. I feel like it's like their minds, and they're not really understanding the concept of DeFi. Like this DeFi, I mean, even on that last video, that guy at the very end, what did he say? Oh, next year is going to be the year of tokenization. That's going to bring so much liquidity to these chains. There's not going to be a bear market when you're bringing in billions and trillions of dollars onto these chains, period. So hopefully that seed being planted to all the listeners who are not really seeing the vision. Just go look at DeFi Llama and start dabbling with DeFi and trying to understand where that liquidity lies and, you know, how it exists there. And this stuff will really start making sense. But so this is, I got to share, this is a super fire video of Marshall Hayner. And you know what I love about Marshall too, is that when he speaks about something, or he talks about the vision of his company, or he talks about, you know, the ecosystem that he's built, it is so easy to understand him. And it's just, there's not a bunch of just like over the head, you know, nerd, like developer talk that none of us, we don't understand that jargon, right? And the way he speaks to the people to where you can really understand what he's saying, especially when you participate in his ecosystem. So I just want to give that little special shout out, because compared to other people, without naming any names, he's very clear. And I love that about Marshall, really starting to see that now. So, all right. So let's see here. Yeah, hold on. Let me share my screen right now here. Hold
Real
on.
fast before you play that video, I just want to give a shout out to everybody tapping in with us. We really do appreciate the love and the support. 2,000 listeners on today's Friday podcast. We're going to start to wrap it up and wind down here soon, primarily because my voice is going out. I can feel it. But yeah, as always, every single Friday hosting these podcasts for you guys live. Thank you so much for tapping in with us. Cannot stress enough. Really do appreciate the love and the support that you guys show. See so many Well 28 Club members in the chat. So really do, appreciate you guys for coming out and showing that love, saying that you guys are learning, you guys are growing. It's such a blessing to see that people are learning from the information that we're providing. Even if you just go out, there's a couple of people that were like, yo, just go out and test the Well 28 Club. That's exactly what we suggest you do. Go out, test it for a month. If you don't learn something, cancel your subscription. Same thing with the CYPRX Discord, right? Come out, test it. Look at the delta zones, apply them to your strategy, apply them to your DCAs, look at them for trading opportunities. If you don't like it, cancel your subscription. Guarantee you, you will learn in the CYPRX community more than what you will learn on the public internet in 1 month than you would on the public internet in 1 year. Hands down, I can stand by that. Like 110%, 110%. So come out, try it out. Again, mentorships and programs that are paid aren't for everybody. And if that's not your case, then guess what? Go over to the YouTube, watch the free stuff, subscribe to myself and Aqua on YouTube. That we're literally dumping content all the time. Follow us on Twitter. We're constantly dropping documents, non-biased, non-opinionated information of just research, showing you guys what's happening behind the scenes in the DeFi ecosystem, right? So definitely tap in with us. We do appreciate you guys. Don't forget that we do have some really good panel discussions coming up here shortly towards the end of August. We have some people that are building out protocols on the XRPL that are going to be live on our podcast, so you're not going to want to miss those as we throw them questions surrounding security measures, where the yield's coming from, why we should even look at utilizing their protocols to earn yield on our digital assets like XRP. That's going to be towards the end of August. So definitely tap in with us. But go ahead, Aqua. Let's see what you got on this video, man.
Yo, and before I share this too, before I share this as well, just do us a favor. If you guys can continue to tag Marshall Hayner and ask him if he could come on the Well 28 podcast with us. So keep tagging him because man,
he's probably watching this right now. Marshall's watching. How many times has he liked your videos and liked these podcasts? I know he watches them.
Yeah, he definitely does, bro. And it's always the ones that are titled with Metallicus or XPR in it. So yeah. If you're listening, Marshall, come on to the show, bro. We would love to have you on.
We won't put you onto the spot with any like outrageous questions. We'll just have a good casual conversation.
We'll sign NDAs, whatever we got to do to have you on, bro. Whatever we got to do. All right, hold on. Let's see here. Can you let's see here. Can you see my screen?
Yeah.
Okay, cool. All right, and let me turn up the volume here. So it's about 4 minutes. So yeah, let's tap in.
Yeah, so Metallicus's vision is to become the world's most customer-centric global digital asset banking network. And that's kind of a mouthful, but the idea is to become a digital asset banking network that's connected to every bank in the world, and to kind of replace some of the older systems that are slow or antiquated, to reduce fraud and friction and payments. And so for us, what would be the big sign of success? It would be a metal connection and integration, metal ecosystem integration into every bank and payment processor. Why should every merchant spend 2 to 3% plus 30 cents for all retail transactions pretty much everywhere globally? 3% all the way down. What's left at the bottom of the supply chain? 3% for one merchant, but 3% times 3% times 3%. That's the pay per text message model. That it was brilliant for the early day payments, and crypto, was supposed to go around that. But what happened was Bitcoin became a store of value, and the early layer ones and early blockchains were just not suited to rival Visa. But now blockchains are. Now you have Proton, you have layer 2s on Ethereum, you have all of these technologies that are starting to get there. I would say we're probably about 5 to 10 years away from the end of paper cash, from the end of blockchains that are painful to use. I think all this stuff's going to get abstracted away, and success for Metallicus would be to be a part of that. When people talk about easy to use digital payments, I'll metal you. I'll use the MetalPay app. Oh yeah, I see the metal logo inside of my bank, just like I see like Zelle or something like that. So for us, that would really be, the big win. And also, simultaneously, at Metallicus, we're building this bank software. Myself and some other executives, Arena Birkin, our CFO, are also forming a bank, First Block Bank and Trust, a proposed bank charter under FPBT Holdings. And so we also want to build our own bank, not just the banking technology, but we also want to build a bank and become a global bank, sort of like Citibank, where you have Citi in Los Angeles and New York, and you also have it in Hong Kong. I think that blockchain technology can empower that, and so for us, that's really the hallmark of success. The metal logo inside your bank, the word metal becoming synonymous with free digital payments, and metal kind of becoming that platform that you use to manage your crypto banking activity. I feel like we've made a really good inroad with that. What's happening right now is the commercialization of blockchain. And when it was originally was Bitcoin, and then blockchain became the buzzword, and then digital assets. They kept kind of moving away from this anti-banking rhetoric. But in the future, every bank will have its own blockchain. Every government will have its own CBDC. Digital assets will become ubiquitous. And I think that it is going to make life a lot better, because in the past, everything was walled garden. It was harder to access higher rates of interest and things like that. It was harder to connect different types of assets. And also the markets were kind of hamstrung, right? In this future world, we're going to have 24/7 global markets. Right now, market shuts off at like 6 p.m. And that's just not the world. That's not the world of the future. That's the world when people used to write down on a piece of paper how much, and people are trading stocks with pieces of paper. That's that world, because those guys have to go home at the end of the day and they power all of that. But in the future, everything's digital. And in my mind, the reason.
So yeah, that's it. That's
Yo, thank God for nerds.
Yeah.
No,
Yeah.
thank
Keep in mind that was 2 years ago too. So that video is not a recent video. That was a video from 2 years ago too, bro.
Thank God for the nerds. I just want to take a second and shout out to all the nerds out there that are revolutionizing finance. Man, he said so much, bro, that the two takeaways is how he mentioned in the future, you're probably going to see the Metal app logo in your banking app. Like what?
Hey, and I got to send you this video. He actually mentions that we're going to go to a world, and he mentions it verbatim, just like the movie Ready Player One, and we're going to be walking into a virtual bank. So that virtual bank that we walk into will have the Metal logo somewhere that, we identify that in that virtual bank. So he even takes it a step further, and he aligns super. I took a recording of it, but we were getting ready. I'm going to send it to you though. But when he said it, I thought of you, because I know that's one of your favorite movies. So
yeah, I think too, another thing that he said he hit on was continuous finance, bro. Like just 24/7, 365. Your yield should be yielding yield, like yield. If that's going to be the future, that's going to be the new normal. It's going to get to the point where it's going to take some time, right? Because the everyday average person is consumed and distracted by their everyday life, their personal problems, their relationship issues, their job, their 9 to 5. They're not paying attention to this stuff, but eventually they'll get to the point where they're like, I'm not earning jack shit on my paycheck each week. I'm sucking. Most people will start to wake up, and people are waking up and realizing that the system's rigged. Things are costing more due to inflation and high prices, and the government consistently devaluing our currency. People are starting to really wake up. Like I'd say that like 2 years ago, the average person didn't really understand, inflation, or didn't understand how the markets work, or how the governments and federal or central banks are printing money and whatnot. But now it's like people are starting to really wake up. Like people that I didn't expect to know about this stuff in my personal life are like, yo, like eggs cost more, bread costs more. It cost me $500 to go to the grocery store when it used to cost me $250. Like more people are starting to wake up, and that's going to continue. That's not going to get better. So more people are going to aim for a solution, and guess what that solution is going to be, y'all? A DeFi.
yeah, Yeah.
So
Facts.
you don't want to not learn this stuff now, just because it might not be important in your life now, or you might be sidelined because of fear, uncertainty, and doubt due to regulation or all these risks that still remain in the market. Again, I cannot stress enough, don't ignore your education. Education does not require risk. Education just requires ambition and your will to see into the future, right? To speculate that this is going to be a solution to a problem that exists now, right? And that is for a fact happening. Right? So, and the crazy part is we've shown you guys on today's call that TradFi giants are the ones telling you guys, like, they're knocking on your window and they're like, yo, hello, like, we're paying attention to this stuff. And the crazy part is too, is for the past 16 years, retail has front run the financial institutions. I'm going to go out on a limb and say that era is over. We are no longer front running the institutions. I mean, in a sense, yes, right? The TradFi institutions are not fully and at scale here yet, but that time is running out. People that do not adopt these new technologies and implement them into their investment schematics and their strategies in the next 1 to 2 years are going to get left behind substantially. I'll give you a perspective. Aqua, when did you get in, or not when did you get into crypto, but we were talking about this yesterday. I don't want to give people dates, but pretty much what me and you were talking about is we were looking at the total cryptocurrency market cap from just 2 years ago. And we were like, dang, 2 years ago, the total cryptocurrency market cap, so that's 2023, beginning of the year, was sitting at like $750 to $1 trillion. It's now sitting at 3.9 trillion.
Yeah. 3.9. It's on teeter-tottering.
Okay, so let's fast forward in another 2 or 3 years, y'all. The market cap's not going to be sitting at no $3.8 trillion. It's going to be $6, probably $10 trillion. You're late to. I'm not saying you're late to the party. There's still going to be opportunities, but you don't want to be the type of person that could have the opportunity now in crypto because you're listening to these type of podcasts, but you're scared, you're fearful. Don't do that. Go out and back your confidence with research in a community like ours that we've built for you all to gain that confidence through education, through documents, through panel discussions, through Zoom calls that we have throughout the week, to give you that confidence to be like, dang, I actually know what I'm doing. And I can like make smart decisions in this space without getting completely wrecked and exposed to the risks of these markets, because I learned from dudes that have 7-figure portfolios, right? And take advantage, take initiative, because now is that time, and we're running out of that time. That time is slowly fading away. Man, I can't imagine what the space is going to look like in the next 5. I said in the chat, the next 5 years are going to be nothing compared to the last 16. And that's insane to think about.
And I really want to say the next 12 months are going to be an absolute wild wave of liquidity coming in. Wild wave, just based off of what all these people are saying. And especially too, that last video that you had shared moments ago, where it was the panel discussion on stage. He literally said next year is going to be the year of tokenization. Like, that's even more liquidity coming to chain. That is so massive. And yeah, just understand that, like, I feel like we're no longer in the we're super early stages anymore, bro. Like, we're on the cusp of things happening and changing, and people are about to get priced out shortly, I feel like.
We've never seen a market cycle where the world's largest and strongest economy is bullish on crypto. We've never been in an environment where the political head of the world's largest economy and strongest economy is bullish on crypto and actually building in the DeFi and crypto ecosystem. None of that, which you have to understand, is priced into the market yet. I hope people truly understand that none of what's happened in the last year and a half is priced into crypto yet. We're still in a trading environment, in a headline-driven environment, where if Trump farts about tariffs and geopolitical tensions between the Middle East, Russia, Ukraine, or Taiwan and China creates a risk-off induced environment, all of that is still controlling market fluctuations and price action right now. None of what's happened over the last year and a half of all these bullish institutional announcements is priced into the market yet. Like, none, zero.
Yeah. Hey, and being tapped into our community, it's amazing to be tapped into our community and to know why the market is going down. It's like we go in the Discord and there's like rational thoughts and people really understanding why the market is down. Because like you said, you know, Donald Trump's over here talking shit about tariffs. So it's bloody ass markets. But then you go on X and people are like, this is a scam. The bear market has arrived, guys.
Yo, how people thought yesterday because of the Rippleverse SEC case that's why the market was pumping yesterday fucking cracks me up, bro. Yo, I swear to God, not to talk shit, but any influencer that said that yesterday the market was green because of the Rippleverse SEC case, unfollow them right now. Like
facts,
right now.
facts, super facts. Yeah, that's.
Oh man.
I mean, Stronghold was even up too yesterday. It was up like 15%. Like all these other assets were up, bro. Like,
yeah, man, it's nuts. The stuff that's distracting people on social media right now. It's honestly, let me calm myself and humble myself. It is sad. It is super sad that the algorithms favor people that spew hype and price predictions all the time. Like anybody telling you guys specific dates and price action timelines should be unfollowed because nobody has a crystal ball and nobody can accurately do that. If anybody could accurately do that, then BlackRock, JP Morgan, Morgan Stanley would all fucking be at their doorstep hiring them to come work at their institution. And that's not what they're doing, y'all.
yeah,
Sorry.
that's real. That's
You know?
super real. Yeah, I mean, and dude, I'll put the cherry on top with this though. Man, this bad boy is back on the tear. Loan protocol. You see this? It's almost about to be up 2,400% on the 1 year. The last 7 days, last 14 days, the whole month has been on the tear, 259%.
Yeah, man. I'm telling you, this post, I go back to this post. I really cannot stress enough the regulatory clarity and the way that the Metallicus ecosystem has built their infrastructure and what Marshall Lehner has been doing. Where's the dang post at where I said, yeah, this one right here. The amount of FOMO, I got to share my screen, the amount of FOMO that's about to come to the Metallicus ecosystem once people really wake up. Like I used to do it. It's crazy. I talk about this all the time in the community. I used to be one of those people like 2 years ago when I first started hearing about XPR. I remember Ruby in the chat, one of the CYPRX OGs was like, yo, bro, buy XPR. And I was like, nah, dude, it's like, trying to pretend to be XRP. And I was like one of those dudes that was like ignorant about it because I thought that it was just like another ticker symbol of crypto that's trying to like pretend to, overpower XRP. Now I'm like, I regret not listening. When you shared the video or the screen share tracking the wallets of the lady from Metallicus, where she had 25 grand invested into loan last year, and now that 25 grand is worth $500,000. Yep. I'm like, dang, my 7-figure portfolio right now could be worth multiple 7 figures had I just listened to your ass freaking last year, bro.
Bro, hey, shout out to DeFi King, bro. If it wasn't for DeFi King to plant that seed of the Metallicus ecosystem, I probably wouldn't have come this far. But he planted the seed. He would have many conversations with me as I was learning. And shout out to DeFi King because he's really the one that planted the seed. And ever since, that seed has just been growing and sprouting. And for a minute there, we were focused on building out Wealth 28 Club, and I just get so focused and wrapped up in like daily news and new DeFi protocols that I wasn't like really doing the research, the deep dive research that I should have. Like I knew surface level stuff and I had a nice bag and I was buying more and more, but I was still a lot more bullish on XRP at the time. And, fast forward now, like I still got a nice bag of XRP. I'm not getting rid of it. I got XRP tattooed on me, but XPR for me and what the Metallicus ecosystem looks like today for me, they're the most aligned with what's coming. They're the only ones that are BSA compliant. And the fact that they're open source and, these guys have a banking innovation program that have hundreds, if not thousands of institutions and credit unions that are literally testing out on a test net, the block, like their own blockchain, their own stable coin, dApps and all that stuff. And I'm just looking at that like, I know no one has come out and they haven't, announced like, hey, this credit union is going to start using the entire ecosystem. But I'm just looking at my own point of view and my own logic, like, yo, using my web auth, connecting to MetalX and, you know, borrowing against my XRP, this is rather easy and it's super, super smooth. So I think like, even if it's a small percentage of those credit unions and banks out of that banking innovation that say, hey, sign us up. We want our own, you know, stable coin. We want our own blockchain. Like that alone is going to do numbers, let alone if it's like 40, 50, 70% of the banks that were in that innovation program say, hey, we're going to have our own blockchain. That's going to be massive, because here's another thing too. This is something that I learned yesterday. Just shout out to the TDBN community, being in their community and learning from these guys as well. When one of these, you know, institutions want to have their own blockchain, their own stablecoin, by default, they have to have 5 nodes to do that. To run a subnet, you have to have 5 nodes, right? So if you have 5 nodes that can earn you yield, and you're like, yo, like, we hold this asset. Why would we put this asset in cold storage when this is additional cash flow for these institutions to put that metal into the validator to earn yield? And right now it's anywhere from 10 to 12%. And I feel like AVAX, being the, you know, metal blockchain, is a fork of AVAX, and AVAX is more concentrated on gaming, and seeing FIFA blockchain over there having their own validator, I feel like speaks loudly of the potential and what can come to the metal blockchain once the fireworks show really starts going off and we start hearing announcements and stuff. You know what I mean?
Yeah, I think it's honestly just a matter of time. It's a matter of time before this post is reflected back on, where we here in the Wealth 28 Club are like, yo, stop paying attention to price predictions and price analytics and all this bullish, hypey crap that exists in the market, and just focus on strategy, focus on building portfolios, and focus on learning how to get your digital assets working for you, and not just through these whole high yield incentives like, you know, some of these DeFi enthusiasts tout out to you guys. You know, we've participated in those here and there in the Wealth 28 Club, and that's cool and all, but it's really about, you know, consistency. It's about strategy, and it's about seeing the long-term vision. You should be learning how to lend, learning how to borrow, learning how to mint, learning how to trade, learning how to pool, learning how to farm, learning how to swap, right? Being your own bank. We ask this question in the chat and in the CYPRX community all the time. You know, we have now the ability to be our own bank, but are you mature enough as an individual in your personal life, in your financial life, in your spiritual life, to become your own bank? That's the real question, because most people, unfortunately, are forced to say no because they're not mature enough. They're not responsible with their finances. They aren't forward looking into the future. They aren't stacked enough and secure enough in their relationships to even be able to focus on these things. You have to really start to visualize yourself as a whole, right? In order to participate successfully in this ecosystem. It's not anymore about just buying and hodling like it was back in 2021. You're going to get left behind, or at least at a minimum, you're going to miss out on a lot of granular opportunities that existed to you in the now because you slept on your education. So don't be that type of person. Be ever expanding and ever growing and ever efficient. I cannot stress enough. I want to leave you guys with this motivational post here. So shout out to you guys, 2,400 listeners tapping in with us today. Make sure that you guys catch these podcasts every Friday, 10 a.m. Pacific, 12 p.m. noon Central Time. We start these podcasts, give or take a few minutes here thereafter. And then throughout the week, we constantly stream panel discussions. I'm going to keep continuing to do so because you guys have seemed to like those recently, of the largest financial institutions and organizations that opinions actually matter in this space. All throughout the week, you guys can catch those live. For anybody that's tapping in with us, we see so many people in the Wealth 28 Club in the comments. Shout out to you guys for tapping in and giving us such positive feedback. It's always great to see you guys learning and growing with us. Today was a really great call. So if you came into this late, definitely go back to the beginning and watch up until the point where you came in at, because there's a lot of juicy information. We shared documents. We shared perspectives from some large financial industry leading experts. We showed how Chair Atkins came out and verbally stated that staking, liquid staking, and rewards that you're earning from all of those DeFi primitives do not classify as a security. Like, we are really headed into this momentum-driven era where people that can't see it, that don't get it on what's about to happen between now and 2030, you know, it's now time to really lock in and pay attention to who you're, content that you're digesting. So I want to leave you guys here with this, where I said here in this post, we are all in part a product of our environment, but we are defined or you are defined by your or our actions. You can't choose where you started, but you can choose where you are headed. No amount of complaining rewrites your outcome. Every step forward, however, and every move with intention reshapes your reality. In this digital era, the tools to shift your trajectory are finally in your hands. DeFi, crypto, blockchain, all opportunities are here for you, the ones who are ready to take action. You are not just the result of your past, you are the architect of what's next. So time to lock in. All right. So I'll leave you guys here with that. That's all I got for today. Blessings to you guys. Aqua, thank you so much for chilling with me on the podcast today. Yeah, man, we freaking killed it. Great stuff shared today.
Yeah. We've been crushing it week after week this whole year, to be honest with you. Like, just looking back how we started, all the guests and all, like, we have more guests coming on, man. Like, shout out to you as well, bro. Like, I feel like you don't get enough credit, bro, in this game. Like, the consistency that you put out, all the docs that you put out, all the videos that you're constantly just putting out. You don't have to do all that shit. You can come over here and recycle shit. But no, the truth is that, bro, you put out something new every fucking day. And the moment you catch on to that, you start seeing the separation of like, oh, this is okay, so I should probably consume this type of content as opposed to this content. But if you're just, taking in the content of like dopamine hits, you can't see the compare and contrast. So like, shout out to you for doing what you do, bro. Keep going. And yeah, bro.
You start to see, just to cap on what you said, you start to see who's actually making money in this space and who's just talking about making money in this space.
Facts.
I'll just put it there.
Facts.
You got all these people out there that are putting out these bullish price predictions and shit, but they're not actually teaching people about the markets in which they're operating in, which is where we separate ourselves as CYPRX. We're real traders, real investors with seven-figure portfolios. Shout out to my man Aqua for coming to the 7-figure lounge, baby. Yeah. I got to give you credit for that. It's so monumental. But yeah, man, it's it's crazy world out there that people really, they digest this information from these people with high following counts when these people behind the computers have never actually made $1 in the markets before in their lives. So
yeah, bro. And some, man, like it really shows the maturity that we have too, bro. Because most people, if they had that type of portfolio, they wouldn't be doing this. They'd be out running amok, doing wild stuff, blowing a bunch of money and stuff. And like, here we are, we're grinding. We're still at it. Like, it's time to lock in even more. You know what I mean? So,
yeah, man. Yeah, absolutely. Well, it was a good podcast today. I'm going to go enjoy some time, try to continue to heal this sickness that overcame me this week. So blessings to you guys. I wish all of you guys good health, momentum, focus throughout the weekend. Don't use the weekend as an excuse to be lazy. Be productive. Do something positive that is going to set you up for success next week before you attempt to take a break. Even if you work that 9-to-5 job, you probably had everybody today in your office or in your cubicle or whatever you're doing in your 9-to-5, like, oh, thank God it's Friday. Don't be that type of person. Be the type of person that embraces each day with a positive mindset and heads into the weekend with focus and goal-setting intentions so that way you can be successful next week. Blessings to you guys, and we'll see you all next weekend.
Much love, everybody.